Commodities are on fire, surging nearly 2% this week, with the RSI hitting 81. A bullish trend is unfolding, but can it sustain? Geopolitical tensions loom. This is what every serious investor needs to know about commodities right now. Stay with me. Welcome back, or welcome if you are new to Financial Market Oracle. This week, we find ourselves in an environment of elevated uncertainty, with the VIX at 29.9, indicating a regime of heightened volatility. In this context, the commodities sector is exhibiting notable relative strength, outpacing the S&P 500. The sector ETF, GSG, has posted a gain of 1.93%, which is a significant move, especially when compared to the broader market. This outperformance is a clear indication that investors are seeking refuge in tangible assets, and the commodities sector is benefiting from this rotation. Given the current market dynamics, it is crucial to delve into the commodities space, as it may offer opportunities for investors to navigate the uncertainty. As we explore this sector, remember that this is educational content and not financial advice. The commodities sector deserves attention right now, and understanding its trends and themes can be beneficial for strategic positioning. Let us start with the technical picture and what the charts are telling us. The commodities sector, as tracked by the GSG ETF, has posted a notable weekly gain of 1.93%, with a more impressive monthly increase of 23.81%. The Relative Strength Index, or RSI, is currently at 81, indicating that the sector is in overbought territory. This RSI reading implies that the sector may be due for a period of consolidation or a pullback, as the momentum has been quite strong. The trend direction is clearly upward, with conviction, as the sector has been able to sustain its gains over the past month. Key support and resistance levels are likely to be tested in the coming weeks, as the sector navigates this overbought condition. The current move can be seen as a potential breakout, but it also bears the characteristics of an extended overreach, given the rapid pace of the advance. A technical setup worth watching this week is whether the sector can hold its current levels, or if it will experience a period of consolidation, which could potentially lead to a more sustainable breakout. Now let us look at the fundamental catalysts driving this sector. The commodities sector is facing a complex landscape this week, with both macro tailwinds and headwinds at play. On one hand, the elevated uncertainty reflected in a VIX of 29.9 could support safe haven assets like gold and silver, which are key components of the GLD and SLV exchange-traded funds. On the other hand, the recent strength in the US dollar could potentially weigh on commodity prices, particularly for oil and agricultural commodities like corn and wheat, which are tracked by the USO, corn, and WEAT funds. The key stocks in this sector are signaling a mixed picture, with some commodity prices holding up relatively well despite the uncertainty. Earnings reports from major commodity producers are not a significant focus this week, but regulatory news and macro data could move the sector. The longer-term fundamental thesis for being positioned in commodities is rooted in the ongoing global demand for these essential resources, as well as the potential for supply chain disruptions and geopolitical tensions to support prices. As we navigate this complex environment, it is essential to consider the broader macro conditions and their impact on the commodities sector. With general macro conditions influencing the sector's trajectory, investors should remain vigilant and focused on the underlying drivers of commodity prices. Next, let us talk about the specific risks you need to manage this week. As we assess the commodities sector this week, investors are faced with several key risks, primarily centered around supply chain disruptions, geopolitical tensions, and a potential slowdown in global economic growth, which could lead to decreased demand for raw materials. With the VIX at 29.9, indicating a high level of market volatility, it is crucial for investors to be mindful of position sizing, aiming to balance potential upside with careful management of downside exposure. Unexpected headwinds, such as unforeseen weather events or sudden shifts in government policies, could further exacerbate market fluctuations. To navigate these risks, a disciplined framework for managing downside exposure is essential, incorporating strategies such as diversification, hedging, and regular portfolio rebalancing. By adopting a proactive and adaptive approach to risk management, investors can better withstand market uncertainties. And now for the strategic outlook, where does commodities stand heading into next week? Our strategic positioning for commodities this week is cautiously bullish, driven by supply chain disruptions. A key theme to track is the impact of weather patterns on agricultural prices. This is educational content and not financial advice. Consider these insights when evaluating your portfolio. For more, like and subscribe to Financial Market Oracle and comment your commodities watch list below. Until next week, stay informed, stay disciplined, and stay profitable. Cheers! This video is for educational and entertainment purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Past performance is not indicative of future results.